we now have to get a wrap of the budget and the implications on superannuation. There's talk about pension asset test changes and whatever, and there's no better person to talk about when it comes to the nitty-gritty, sometimes called boring, but is the important stuff in the superannuation fine print. Tony Negline writes in the Australian newspaper, but also writes the Switzer Super Report every week and explains the tough stuff. How are you, mate?
Very well.
Let's start off with the leaks we've heard so far around the budget, superannuation and retirees.
Okay, well, Joe Hockey came out today and said no super tax increases. So that's rumour number one.
Okay.
Okay, so I guess we can take that this year anyway. Yeah. So we can take that off the table to some extent. Next rumour is age pension changes. So that's a big deal for a lot of people.
Yes.
So there've been lots of people saying change the taper rate to the assets test.
Yeah. Hold there. There are normal people out here who don't understand what the taper rate is. So Tony, explain it.
Okay. So you put your family home to one side. That's not an asset for the assets test.
Good.
All your other assets are counted.
Yeah.
And the more assets you have, you go above a certain threshold, depending on whether or not you are a single or a couple. Yeah. And then once you go above a certain threshold, you then start to lose the pension.
Yeah.
$1.50 per $1,000 worth of assets.
Yeah.
In the old days, pre-John Howard's 2007 reforms, or Costello's 2007 reforms, it used to be $3. You'd lose $3 of pension for every $1,000 worth of assets.
Yeah.
So Howard and Costello halved it.
Meant that you could hang on to the pension at higher asset rates than was previous the case.
That's right. So in the old days, you needed about $750,000 a couple homeowner before you lost the pension. Yeah. Now you
can have 1.1, isn't it?
1.1.
Okay.
Yeah. So that's the impact.
That could change.
Big change. Well, there is talk of them dropping it. Now, will they go back to $3? Will they go to $2? Will they taper it? Will they reduce it, say, to $2.50 and then to $2 or whatever it is? Either way, there is a lot of money going out the government's back door in the form of age pension payments. Yeah. So they probably feel compelled to do something. In the past, their strategy was to reduce the indexation rate of the pension and to make some other changes. All that stuff seems to be pushed aside, and adjustments to the assets test taper rate.
Okay. Now, a health card is a related issue as well.
Huge
if
issue.
some people lose the part pension, which they probably... It's for a lot of people, 1.1 million assets over and above their house is probably a mere bagatelle. They want it for the health card.
Yes, they want. Well, look, some people say, look, there's money on the table, I'll take it.
Yeah.
Yeah. Now,
funny that, isn't it?
That's right. So so my understanding is that what they will probably do is they'll probably say, okay, if you lose the pension, you will get to keep the Commonwealth Seniors Health Card. Yeah.
The people who currently got a part pension, they might lose it, but keep the health card.
Keep the health, and of course that gives you transport discounts. It gives you medicine, and it gives you a few other things on top of that.
Yeah. Okay. So that's highly likely. I don't think Joe and Tony want to offend battling Australia like the last budget, because the Greens and Labor aren't going to tick it off, so it's just going to be a waste of time, isn't it?
Well, look, there's two sides to it. They also don't want to offend their own constituency. Yeah. So, it's a very, very important juggling act.
Well, I guess where can the constituency go? To the Palmer United Party? I don't think so. If you're that kind of person, you're stuck with Tony and Joe. It's the middle one, the group that might go to Labor or the Greens are going to try and win back, I guess.
Correct, or retain.
Okay.
Yes, yeah.
All right. Any other leaks that we should be holding our breath for?
Well, of course, there are always, there are always things that we don't necessarily know about. Yeah. They of course they have the tax white paper going on in the background. Yeah. There may be other changes to pensions and eligibility for them and all of those other sorts of things.
Yes, the payment that they brought back to the CPI indexation, and they cut it.
Pushed.
Yeah, and the idea was that, okay, in the old days it was what were ordinary wages going up by, or CPI, and give them the biggest. They might bring that back, I heard.
Well, yes, I think they'll stick with average wages because they don't seem to be able to get that through the Senate. Yeah. So I think that's probably gone. Yeah. The other thing there might be changes around some super contribution areas, although they've said that they won't make any changes there.
Significant changes. Yeah.
Well, in the sense that there's been a recent increase to $30,000. They might push it, they might delay indexation of it. You know, there are some funny ways they can play around with that a bit.
Okay, let's talk quickly about what Labor is proposing on the side. So the big one was, if you earn more than 75 grand, any money over that for a retiree who's currently in the zero tax zone, anything over 75,000, you're going to be taxed at 15%.
Yes, correct.
Yeah.
Now, I would be surprised if the coalition went for that. It is administratively for super funds a dog's breakfast.
Yeah.
That's of course never stopped them before, you know, implementing changes, unfortunately. But it is a dog's breakfast. I would be surprised if they went for it. But there is an issue there about, you know, the equity issue of whether or not people with very large amounts of money should be getting all this money tax-free, and the optics of it aren't necessarily the best. From an investor's perspective, what I would look to do is that I would be looking to split my account apart if I had a partner
with a smaller super balance or no super balance at all.
That's right, and try and equalise those so that I've then got less exposure to these additional taxes.
Yeah. Okay. It's interesting. Every little change, people like you and me start looking at alternatives to get around that change.
Well, that's what's expected.
That's our job.
Yeah,
that's our job.
That's our job.
One quick one. That Labor's talking about, if you earn $250,000, your super contributions will be taxed on the way in
at 30%.
At
30%. Their original idea, well, the current policy is that if you have income of more than 300 grand, you get taxed at 30% on the way in. Their policy is to reduce that threshold from 250 from 300 to 250.
Now, shock a few people. That 250 is not just your wages. You got to add in, if you got a tax loss on an investment property, that loss gets added to your income to push you up close to the 250.
And your reportable fringe benefits. So there's a few other potential nasties in there where you can be pushed into the.
Yeah, and I really do not think that the coalition will be contemplating that particular one.
No, I don't think so.
All right, buddy. Thanks for joining us. As I say, Tony Negline, champion rider on the Switzer Super Report. After the break, we'll see if the complementary medicine that we're all taking nowadays is basically critical to the success of companies like Blackmores. And we also want to know, is this just a passing fad? Will we give up on alternative medicines somewhere down the track? Ross Walker, our medical genius, will be in a moment.